Hey, this guy here. I told you. What are you saying? So let me share my screen and we really start off so that we really don't waste time. Mm. Mm. Okay. So, let me share my screen. So how is the market treating everyone? Are we making some money? Okay, are we making some money? Because at least now I should take it that much as floating loss is in as serious as it was then when people were strictly uh, into getting
Yeah, it seems we lost the speaker. He's joining back. He's joining back. So let's wait for him. Okay, he's joining back. All right.
All right, so sorry about that break. Okay, so today we're going to have a continuation of what we started in the course of the week, and today we're going to look at yet another indicator, and possibly we see how we can as well incorporate it onto the chart as we try to make meaning onto what is happening in the market with regards to market analysis. So we already did look at a number of indicators, and today being a Friday, let me just quickly reflect on, recap on the indicators that we so far looked at already. We looked at a number of them. We said there are actually a number of indicators, but for the consumption of our class, we are not going to look at all of them. We are going to be selective. We are going to pick a few of them, especially those that I feel may be easier to use or incorporate onto the chart when you're making analysis. So we looked at the different categories of indicators, about 5, and then we broke it down, and under each we picked a few of them, and we did share in details about them for those who have not been in the classes. You could possibly visit the YouTube channel, and then you go through them. Okay, go and see how you can learn how to use each of them in your trading analysis. Okay. Oh, sorry, in market analysis, not trading analysis. I beg your pardon. Okay, so go and look at them. You're going to find it in the, you can go and visit the YouTube channels where this very recording is also going to be uploaded. And then, yeah, you watch them. Spend your time and watch them. It goes for about an hour, but you can possibly spare some time and go through them. So we looked at a few indicators. We looked at the MACD indicator, We did look at the stochastic RSI indicator. We did look at the Fibonacci retracement indicator, and the Fib, we looked at it yesterday. Okay, we looked at the Fib yesterday. And so today we're going to build up on that. And then we look at the next indicator, which is the BB, the Bollinger Band. Okay, so I do believe and trust that, yes, there are a couple of other indicators, but I think you'll have time for yourself and possibly go and look out for some of them. And if you feel or see that they work for you, you can as well learn more about them and then incorporate them onto your chart to guide you or aid in your analysis. But for me, I do believe with these 4 indicators, once you have a proper grasp onto how to use them, and then you only don't use them as a standalone indicator in market analysis, probably you incorporate 2 and then bring in the aspects of price action, the support and resistance. it could actually be of great help to you and trying to propel you through your trading journey. So it's very important that you literally cannot cover everything, but then you can, out of the many or out of the few that has been shared, pick one of your interests, one or two or three, and then familiarize yourself with them. Okay? Get to use them so often so that they become part of you. And the more they become part of you, the more it's gonna help you so much, and it becomes perfect in helping you analyze the market properly before making entry. Yeah, so most of all, so much learn about price action is very important. Understand, especially uh, trend lines, okay, support and resistance. And if you can go an extra mile and you wanna really get to understand a deeper, you want to have a deeper dive into market analysis, wanting to know and understand what moves the market, what is the reason behind the market moving into certain ways upon which we as retail traders ride upon. Huh? We ride on and then we also make the money. Then go ahead and learn about the smart money concept. It will really paint a proper and a beautiful picture onto what the market really offers. Because truth be told, we the retail traders, majority of us, I would say, who are trading currently, especially using the Royal Q boat, we ride on the smart traders. So it is the smart traders who move the market. They have the power of moving and propelling and manipulating the market whichever way they would wish. And us, as retail traders, we tend to ride on their back, okay? Yeah, because of the little capital we have, most of us trade with very little capital. So when you understand some of the, the nitty-gritties, the hidden secrets that are used by smart money in moving the market, then you'll greatly be in position to really appreciate what the crypto market offers. Okay, so today we're going to look at the Bollinger Band, and just a minute. Let me take this call press. Let me take this call quickly, and then uh, just a minute. Take this call. All right. Sorry, guys. Sorry. Let's come back. There was a very urgent call I couldn't miss out from my home. So, okay. So let's come back. So we're going to look at the Bollinger Band. Now, what is this Bollinger Band? The Bollinger Band is one of the, one of those indicators that most of the times we use, but specifically, the Bollinger Band is not a trend indicator. That is an aspect you need to really understand. It's not a trend indicator. It does not help in predicting direction, but rather a Bollinger Band specifically helps in showing market volatility, right? Where's my writing tool? I'm trying to get it here. I'm not seeing it. Where is it hidden? Let me pick it up. Let me pick it up. Let me first pick this. Just a minute. Let me do this and then I reshare. Let me reshare so that I can. Okay. Okay. All right. So the Bollinger Band is not as I said, it does not help you predict the direction of the market, okay? But it helps you do the following one. It helps in actually showing the volatility of the market. And then also it helps in showing the relative price level, the relative price reaction levels, okay? The possible price reaction levels. That's what the Bollinger Band does. So it's not a trend it's not, it does not predict the direction of the market. All right. So now the Bollinger Band, first of all, is one of those indicators that are incorporated or is plotted directly on the chart. Unlike the other indicators we looked at, like the MACD, the stochastic RSI, the Bollinger Band works like the fib retracement. It is actually plotted. It plots itself directly on the price chart. Okay, yeah. So, and the Bollinger Band, the features of the Bollinger Band. Let's look at the features. The features of the Bollinger Band. The Bollinger Band has actually consists of 3 lines. It consists of 3 lines. It's an indicator that consists of 3 lines that runs parallel to each other. Okay? They run parallel to each other. These lines are sometimes referred to as bands. Okay? They are also called bands. Now, these bands, since they run parallel to each other, they form what we call a channel. All right? They form what we call a channel. Now, these lines are divided into 3. There is what we call the upper band. There is the middle band. And then there is the lower band. So they are the 3 bands that runs parallel to one another to bring about the channel, okay, the channel formation. Now, what we need to understand about the movement of these lines, okay, what we need to understand about the movements of this line, and later on probably help how we can use them to help us interpret, okay, the market, is that entirely the reading or the how would I call it? Would call it how you can actually uh, uh, analyze the market based on the Bollinger Band is actually boils down to 2 things. Okay, it boils down to 2 things. The first thing is on the what we would call the is could I call it converging? Okay, let me call it squeezing. The squeezing or narrow. The best English would be narrowing. It is based on the narrowing and widening of this channel established. Remember, we said the channel is established or is formed by the three bands, okay? The bands runs together. They run parallel to one another to form a channel. Now, the interpretation of the behaviors of traders in the market or the market situation is based on the narrowing and widening of these bands, okay? Because the widening and the narrowing of these bands will help us tell the volatility of the market. So it will help inform us about the volatility of the market, how volatile the market is, how aggressive a given group of traders are in the market at that particular time. Okay? Are the sellers more aggressive? Are the buyers more aggressive? So that is what basically the narrowing and the widening of this channel helps us to do. It helps in telling us or showing us the volatility of the market. So that is one aspect of how you interpret the Bollinger Band, is how it is widening or narrowing. You would sometimes call it the narrowing, is sometimes called squeezing or converging. Okay, and we're going to look at that in on the chart shortly. Then the second aspects on how you interpret or read the market is on as to whether the price is within the upper band or the lower band. All right. Now, it depends on the location of the price on the bands. Okay. So where the price is on the respective bands will help you make an informed decision of a possibility of what is most likely going to happen. Okay. Or with regards to what is most likely going to happen in the market. Okay. So you need to pay so much attention to where the market price is. Besides the narrowing and the widening of the band, you also pay attention to the location of the price in relation to the bands. Okay? If the price is on the upper band or once it touches the upper band, okay, that is an indication of that particular asset being overbought. It means that asset has been overbought. And what it will help you, therefore, or what it will help inform you, therefore, is that the market is most likely going to encounter a pullback anytime soon. Okay, because once an asset has been overbought, what happens next is that most traders tend to take profit, right? Right? Yeah, because the price would have risen significantly. So the sports traders or those who would have entered long position would wish to take some profit or may begin taking some profit. And that is what will bring about the pullback or the drop in the market price. Now, also, once it is within the upper band, apart from only showing a possibility of a pullback, it also tells you that the market possibly may be undergoing consolidation. All right, it may be consolidating. A consolidating is more of like accumulations of position. Okay, before the market price, you know, the three phases of price delivery. I mean, the four phases of price delivery algorithm. There is the consolidation, which most at times is also called accumulation. There is an accumulation phase where traders, you know, accumulate position before the price actually expands or the price delivers to the other side of the market, right? So there is that aspect of accumulation. So there is the accumulation phase, there is the expansion stage, then there is the pullback, or what you would call retracement, and then trend reversal. So those are the four phases in price delivery algorithm. So now, incorporating that onto the Bollinger Band, what happens here is once you see the price is around or it has touched the upper zone, what should come to your mind is that the price may be at a stage of consolidation. Yes, at the end of it all, the end goal is a pullback. You know that there's a possibility of a pullback going to happen, but the pullback doesn't just happen at random. Remember, even those who will be taking up a short position normally set their entry zone around the upper zone or the upper band. So they will have to accumulate sufficient position before the price will deliver to the downside. So with that, it means that once the price touches on the upper zone, there is a possibility, a high chance of a pullback, right? A pullback, sometimes we may call it a retracement to gather more momentum to continue, if at all it will. Also, if it touches the upper zone, the upper band, what must also be at the back of your mind is apart from a pullback, there is also a possibility of a trend reversal. Okay? It may pull back and then continue the trend, or it may pull back and it turns out to be a reversal and it doesn't really go up again, but rather go down completely, to begins going to the downside. So it's also very important to know that. So there is the pullback, consolidation, and then a reversal. That is when the price touches. So that's why it is very critical for you as you're using the Bollinger Band. You have to interpret what you're seeing on the chart on the Bollinger Band in relation to the price on the chart, okay, or in the market. Then when the price is around the lower band, or when it touches the lower band, it simply means that that asset or that coin has been oversold. And what is the effect of overselling? One, it creates demand, right? It creates demand, right? So that means the price would have dropped so significantly to an extent where traders will begin demanding. They would want to accumulate position so as the price can be delivered to the upside. Yeah, because of the aspect of the price drop. So once the price touches on the lower band, okay, it is a sign of an oversold. And because of that, there's a likelihood that the price is going to bounce back up, okay, in an attempt to either pull back or retrace, or it may actually be a sign of a trend reversal, especially if it had actually taken some time to go to the downside. So once you see it around the lower band, it's a possibility of a pullback or a bounce back or a retracement or possibly even a reversal to the upside. Okay, so it is key. It's key. It's very important that you observe the behavior of prices once they touch on the two bands, especially the upper and the lower. Okay, now the middle band, basically for it, it's like it's a moving average. It's a simple moving average, and most of the times it is the 20-day simple moving average. So for it, what it will do more or less, it acts like a reference price, a reference point. Sorry, not price, but a reference, a benchmark upon which the upper band will either, okay, it acts like a reference price. I'm not price. Sorry, I beg your pardon. It acts like a reference point, okay, upon which or from which the upper band will either expand, okay, or will converge towards. Same applies to the lower band. It acts as a reference point from which the lower band either expands or widens or converges or narrows towards. So for it, it is more like a neutral zone, okay? It is the upper band and the lower band that expands and shrinks, okay, depending on the volatility. All right. Is that okay still? Are we still fine up to that point before we can proceed? Are we okay? Are we okay up to that point? Are we good up to that point? Somebody's paying attention to the battery. Yeah, if it goes off, then yeah, the call ends there. Okay. Somebody's really, he said, he's busy looking at my battery. I have a power bank, don't worry. Yeah, I'll connect my power bank. I have it with me. So, all right. So if it is good, then we are good. All right. Yeah, I trust we're still okay. We are moving well. Let's go back. Let's go back. So I'm gonna go to the chart straight away. Let me first go to the chart and we'll see. So me look Coco, yeah, Coco. Okay. Yes, remove this. So this is the Bollinger Band. This is the Bollinger Band. This is it. This is it. Okay. So let me come here. Okay. Whew. Can you imagine? Yeah. Finally. This is beautiful. 10%. Ah, that's good. That's good. That's good. That's good. Finally. Okay. So let's come back here. Let's come back here. Now, this is the Bollinger Band. This is Bollinger. I just hit my 10%. And it's, I took the trade very early in the morning, around 3 a.m. And finally, my 10 TP. Woof. This is good heavy breakfast, Ooh, wow. Really, it's good when you really know how to traverse this market. It's very amazing. So the Bollinger Band, this is a Bollinger Band. Let me just remove this is my analysis. Let me just get them off. All right. So this is the Bollinger Band. It has the three bands or lines with can you guys see my screen?
Yes, we can see your screen, please.
Okay. Okay. All right. No, these daily zooms are always recorded, and I saw someone has shared a link there in the YouTube link. You will find it in the YouTube link. Okay. Later on, they will share the link. Don't worry. You can always go and visit and this coin, this market. I don't know what has happened. Let me see something here. I wanted to let me take some money. See what happens with. Just a minute. Let me see the picture. Let me try to view the future. The future is very bright. There's a bright future ahead. Okay, beautiful. So let me finish. Let me wind up quickly and really embark on something. I want to make some $200 just for something. So maybe, yeah. Okay. So the Bollinger Band has the three bands or the lines, just like I said. It has the upper band, the lower band, and the middle band. And these are the lines. These are the lines. These are the lines. Just a minute. Okay. These are the lines. This one is the upper band. This one is the middle band. And this is the lower band. Now, in simple term, these bands as well also act as support and resistance, with the upper band acting as a resistance zone. It provides a resistance zone. It gives you, it will locate a resistance zone, and then this also locates a support zone. And what you must also know, understand about this is that when the Bollinger Band shrinks, okay, all right, we're talking about volatility. When the Bollinger Band shrinks, okay, when the Bollinger Band shrinks, like we're seeing here, when it shrinks, before it shrinks, it starts from when it is actually wide, okay, when it is wide. But when the Bollinger Band, the upper line and the lower line converges or moves towards the middle band, okay, what you should know is that what that means is that the market is consolidating, just like I said. And then normally what follows that is what we call a strong breakout. When the Bollinger Band shrinks, when the upper band and the lower band moves towards one another or towards the middle band, first of all, it shows you that the volatility is reducing, okay? That is, the volatility is reducing. If, for example, it was in a particular direction, let's say it was in an uptrend, and then you see it shrinking, it means the momentum, okay? The volatility is reducing, is almost shifting from up to down, right? Or possibly there is a retracement happening in the market. So when they shrink, it shows that the market is undergoing consolidation, and more so, what will follow that would be a breakout. Now, breakout, remember, happens in either direction. It can happen upward, a breakout to the upside, or a breakout to the downside. Okay? So the best you can do is when you want to make entry after the Bollinger Band shrinking, you will have to wait for a breakout direction before you enter. You need to be very sure to which direction the market is taking. Okay? After the shrinking, you don't know the direction that the market is going to take. So you should be waiting for where the direction would be, for an established direction before you make entry. Very important. Very, very important for you to know that. And the other thing you need to know is that once the price touches on the upper band, like I told you earlier on, that is a point where traders will be wanting to take profit. They will be wanting to sell, especially if the price is around this area. If it is on the upper band, you see the upper band? This is the upper band. Once it is around there, okay, what you should know is that the price, what you should know about that is that the traders would begin taking off profits. They would begin selling. Therefore, you should be expecting a return towards the middle band. You should expect a pullback, and normally the pullback is towards the direction of the middle band. Okay, that is a pullback, or what you would call a retracement. After hitting the upper band, which is more of like a resistance, it will have to bounce down. Okay? I mean, it will have to go back towards the middle band, and that would be either it will be a retracement possibility happening there. Now, if the price touches on the lower band, traders will be expecting to take a long position, or they will be expecting to buy. Okay? Why will they be buying? Because they will be expecting the price to rise upward, or to move towards the middle band, or possibly even go past the middle band towards the upper band, like this. So once it touches the lower band, traders will take a buy position, okay? Expecting the price to rise, like we are seeing here, towards the middle band, or even possibly back to the upper band. So the lower band acts more of like a support zone which presents a buy opportunity. So once the candle or the price is on the lower band, just know there is a buy opportunity being presented, okay? Because it means the price of that asset has dropped so much and the coin now is within the oversold region. It has been oversold. And we're going to see when we add in the other indicator, okay? The stochastic RSI, which actually now will help you identify the position at which the price is with regards to that asset. Is it in the oversold or is it in the overbought? So that we can, so that it makes meaning to what we are saying here. Because we are saying that once the price is at this lower band, it's a buy signal. Why? Because the price of that asset is actually within the oversold region. But is it true? You will have to confirm with indicators like stochastic, because it is going to show you the moving averages will show you at what zone the price would be, right? Yeah. So that's why I was telling you that you don't use one indicator as a standalone. Try to incorporate in two or three to see if they're speaking the same language. And then when at all the price or the trend is continuing, if at all it is a trend continuation happening, okay, we have talked about a bounce back, okay, or what we call a retracement, and then also we could talk about the reversal. How do you tell that the price has actually reversed?
Coach Musa,
yes, please.
Your battery.
I get it. Are you okay now? Yeah, it's charging now, okay?
Yes, we are.
Yeah.
Thank you.
Yeah. So, so how do you tell that the price has reversed? You can tell that the price has reversed if, from, for example, the upper band, the price pulls back to the middle band. And instead of the middle band supporting it, okay, to continue up, it breaks below the middle band towards the lower band. For as long as it breaks below the middle band, just know this is a trend reversal to the downside, okay? Not until it touches the lower band, then you can now tell that it is going to reverse and go towards the the upper side. So that is how you tell in a simple way, okay? So this is your resistance, this is your support. This also acts as a support or a resistance depending on where the price is. So that is done. So how do you tell that the price is actually continuing? How do you, the trend is continuing? You tell that for you to know that the trend is continuing, you will have to look at this. That, for example, if it is an uptrend, a strong uptrend, you will realize that the price will be riding along the upper band. That is an indication of a strong uptrend. It means the price is still going to continue rising. As long as you see the candles being printed along the upper band, it's a sign of a strong uptrend. Okay? Because the price would be riding along or around the upper band. It's a good and beautiful strategy for you to know a trend continuation. Okay? And if the price is on the course of a downtrend, for you to tell that that is a strong downtrend or a weak downtrend, you look at where the candles are being printed or where the price is riding on. If you see it riding on the lower band, it is a signal of a strong downtrend. Okay? Are we there? Are we together? It is a strong, so for it, it's about determining strength of the signal. Okay? It determines the strength of the price. So if it is being printed along the lower band, you should just know that it is a strong bearish movement that is happening. Like, let me look out for an example of a strong bearish movement. If I may find one, let me see. Strong bearish. Let me go to Jupiter. I want to see a strong bearish. Okay. This guy is here. Look at this. This was a serious movement. This was a strong downward movement where the price, upon crossing below the middle band, it was being printed along the lower band, being printed along the lower band. So this was a good one, a little bit of a pullback towards the middle band, then it continued. So you see that you realize that the price was only riding along the lower band. So that was a strong movement, a very, very strong movement that resulted into, I don't know what percentage after the breakout. From here, let me just move from the breakout below. That was over 6% drop, okay, continuously. So it was a strong downward movement, all right? Now, what other thing you should know, the secret you should discover or know from here is that if you see, I want you to see this, let me look out for where I can really bring it out clearly. Okay. Bring out clearly. Okay. Now, what other thing you should know? This is what I wanted to say. What other thing you should know when you're observing the movement of the Bollinger Band, okay? If the price was on a strong uptrend, you're going to see an expansion, okay? If it is on an uptrend, a strong uptrend, you're going to see an expansion of the lower and the upper band, or the widening of the lower and the upper band. Where is my, okay, where is it? Okay, yeah. This is what I'm meaning, that if we are having a strong uptrend, you're going to see this kind of movement on the Bollinger Band, an expansion. The upper band will be very far away. The middle band will, of course, will try to maintain a neutral movement, but it also tends to bend a little bit towards the direction of the market, okay? It tends to bend towards it. For it, it remains more of neutral. None of the two actually comes and crosses it, but it tends to bend towards where the strength is, okay? Where more strength is with regards to the trend. If it is an uptrend and it is a strong uptrend, you're going to see the middle band bending towards, yes, it will try to maintain its distance, but it will also be bending towards the uptrend. Then the lower band for it will be bending a little bit away. It bends for it away, okay, causing this expansion or widening. So this should indicate or should tell you that the volatility of this uptrend is actually so strong. The buyers are so aggressive in the market, so much they're not giving the sellers any chance. They're pushing the market over and over because you'll be seeing the price trading or riding on the upper band. And then because of that, you'll be seeing the widening of the upper and the lower band away from the middle band. But the moment you see the two lines beginning to curve towards the middle band, it should tell you that the volatility is reducing. There is a volatility reduction. And what is most likely going to happen is the price is going to drop to the middle band. If it is a pullback, you're going to see the next buildup of volatility increasing again. You're going to see another subsequent widening, okay? It will come towards the middle band. Then if it is supposed to continue, if that drop was a pullback, you're going to see another widening of the lower and the upper band, okay? Away from the middle band. And you're going to see again another buildup of candles just along the upper band. But if it was a trend reversal, you're going to see a break below the middle band. There will be a breakout below the middle band towards the lower band. That is when you will tell that there is already a shift in the trend or market direction. It's no longer how it was before. The reduction in volatility is an indication of a shift in the structure. But as long as it comes and then touches on the middle band, and then, you know, the middle band supports it, and then it picks up again towards the upper the upper direction, then you should tell that it is a continuation of the previous upward movement. Okay, then you're going to see a subsequent increase or widening of the Bollinger Band. But if the price upon shrinking, upon the two lower and upper band shrinking, then the price breaks below the middle band, it should tell you that the trend has reversed. So especially if it comes and touches on the lower band, you should pay more attention, because most likely it is a trend reversal to the downside. So if you are thinking of taking a long position, I mean a short position, a long position, think about it. But when you come across a scenario where after the breakout below the middle band towards the lower band, and the price traded a little bit, because as the price, of course, is being is riding on the lower band, which is a downtrend, there are going to be a time where, of course, you see also there is a widening of the upper band and the lower band away from the middle band. But the middle band will be bending towards the lower band, because it is a downtrend movement. But when you see a scenario comes where, again, the two lines begin shrinking towards one another, you should also now begin informing you that the volatility is reducing. So if it was a downtrend, there's a likelihood that there will be a shift in market structure or direction towards the upside. So that is when you now prepare really and take a long position. Okay, like in this case, let's come back and check that after the break of structure here, you see, for example, if you see around this area, that the price broke below, and then upon touching this, then this was like it's of course, upon touching it always retraces. So you're going to realize that upon touching the lower band, it's going to retrace towards the middle band. You can actually make a buy order. You can set a buy order here and then take profit to the middle band. Okay, every other time it touches the lower band, and it tries to retrace, take your profit to the middle band. If it breaks above the middle band, okay, towards the upper band, as it comes back to the middle band, you can set a buy position. Okay, you can set you can prepare to buy, and then you take profit to the upper band. And that is how you will make entry if you're entirely using only the Bollinger Band. But just like I said, try to add in something. Don't only use that alone, okay? So when you come to the real price, you want to come here and see where the price is. This is where the price is, all right? So what we are seeing here, one, there is a build-up from the lower band. There was a movement there, then an element of rejection happened. It had to drop a little bit before breaking the middle band, right? And then heading towards the upper band, which is in this case acting as our resistance. Now, what the middle band is going to do, if this be a rising market or an uptrend, you're going to see the middle band bending towards the upper band. And then you're going to see the widening of this slightly away from the middle band. Now, as the two widens away from the middle band, it should be showing you how the volatility is increasing. And if it is a strong uptrend, you're going to realize that these candles will only be printed along the upper band. Now, if you want to trade basing on that, what you could do is you want to maintain, trading in that uptrend. You're going to do two things. One, don't forget your support and resistance. From that, you establish your horizontal support and resistance. It will help you a great deal in taking profits. Two, it will also know where the next possible resistance zone will be, even as the price, is riding along the upper band. Three, try to use that to help you establish your margin call drops percentages. So you're using them to establish your margin call drop percentages. And later on, probably, then you create your margin calls, okay? So it is very important for you to do that. So you bring in that element of support and resistance. Don't forget. And 3, don't forget to add in another indicator, especially the stochastic, because the stochastic actually is going to help track through that movement to inform you as to where the price is heading to. Is it heading towards the danger zone, which is the overbought region, which in this case is the supply zone, or is it still within a good and safer zone between the 80 and possibly the 20? Is it around there, or it is already within? Because the more the price, the more the price rides on the upper zone, you may not know what is already happening in the market, how much of that coin has been bought. So adding in the stochastic will help tell at what zone. Is it in the over so bought, which in this case is the supply zone, and it is the red zone for you to make entry or take a long position, or it is midway, it is in between. It is in between here. If it is in the middle, you can continue trading the trend. But if it has crossed the overbought zone, stop trading this trend, because it's gonna crash on you. Okay, it's gonna crash on you. All right. Yeah. So is that okay? Is that clear? Is that clear for everyone? Is that clear for everyone? Is this clear for everyone? Yeah. So it is important normally. You see why we sometimes give a general settings to some people. It's basically for beginners. Some people really may not really have the time to go and analyze the market, or they may possibly not even know how to analyze the market, how to establish, how to measure the margin call drop, and then possibly divide them accordingly into the different calls. So we give those customized settings just to guide and help, because they drop, like personally what I do, I give the common range within which the market price tends to drop in regard to my analysis, because I am a 15 minutes time frame trader. I don't so much trade in bigger time frames. So if I'm going to give you a setting, the settings will be covering the possible or the potential drop. Okay, the potential drop if it is a normal market. Of course, there are other cases where the market gets manipulated. Okay, or because of some sentiment, and then maybe the market, it crashes, and that's when it goes past the estimated percentage drops. But even if it goes past the estimated percentage drop, there is always an allowance, because the percentage I give only covers the first 4 margin calls. So meaning you have other extra calls, right? That is when now you have to come back on the drawing board and see how much more is this price gonna drop. Then you estimate, and you can only do that when you go to the chart, right? Yeah, it has to. You will have to go to the chart. Okay, you will have to go to the chart. Okay, but relatively that is that. But if you're good, if you know how to analyze your coin and entirely you don't depend on signal, you can always go and determine those percentages by yourself. You can always go and measure the drop, the estimated drop maximally on a normal market, and then you distribute the drop within the different calls, but in the order, just like I recommended, in the order of increasing figure. Yeah. Okay. Yeah. Okay. Okay. Somebody's saying, let me add stochastic RSI and see how it works. All right. That's good. Somebody's saying, how does OG looks like? Okay. OG. Yeah. So let's try to go and see, based on what is happening. Okay, so let's let's try to see. Let's try to analyze one of the coin. Okay, let's just try to see what happens. Just a minute. Open it up. Open it up. Hmm. Okay. Okay. All right. So let's see how that works. But of course, most of the times, what I do recommend is okay. Hmm. So can you see my screen? Okay, let's now we are taking Jupiter as a case study coin. We have this Bollinger Band already added, and I want us to begin by looking at this movement. Let's track through this movement. You have your Bollinger Band, so we're analyzing it. We're bringing in the element of support. So I want us to demarcate our area. Possibly I want to look at capture this area. That's where I want to concentrate. And because of that, I'm going to establish my first resistance. That was this, which was broken. So let me come here. This is the first swing high that I expect the price to react to. This is my swing low. Okay. And then there is the mini support within the zone, within the swing high and the swing low, being this. That's the mini. Let me put it in that color. And the price is still within. The next mini reaction zone is we have this area perfectly drawn. Okay, so with that, we now know where we are heading to. So I'm gonna just pick that. So currently our market price is here. Market price is here. So there is already a reaction zone here, which in this case is a resistance based on price reaction around this area. So we also consider this as a key price reaction zone. So we also have another reaction zone here, which in this case is our support, because we are basing on what happened here in the course of the other movement, right? Before, in the course of this movement, if you can see, the price dropped all the way to the lower band before retracing to the middle band, which actually which resisted the price. Then the next movement was the break of structure past that zone to this area. So this is our support 2, support 1. This is resistance 1, and possibly this is resistance 2, okay, based on what happened there. So that perfectly drawn, so we're at a point of deciding as to whether to enter at current price or we wait for a breakout, right? Wait for a breakout above this zone, okay? So what we're going to do is, we already know that the price is already at the upper zone. We have our middle band here. This middle band is going to act as our support, which coincides with the horizontal support. So it means this becomes a very key area of confluence. Very perfect. But now we are at the point of deciding, is this trend really a downtrend? Is it an uptrend? Is it a consolidating trend? So we have to add in a trend indicator, which will help, first of all, tell the direction of the market based on what is building up, and two, it to also guide us on what zone the price is, okay? And I would rather add the stock as TRSI, okay? So let me add it there, and we see. Want to see what is going to happen with this Juke coin and decide on whether to trade it or we go for another. So on adding it there, it is 1 hour time frame. We are already being told that the price is within the overbought zone. It's within the overbought zone. It's within the danger zone. The overbought. This is a supply zone. Most of the times, once the price reaches this zone, traders begin selling, taking profit. Now, it means in this case, we have a decision to make. Okay, we have a decision to make. In a 1 hour time frame, that is the outlook. We're already within the oversold. Our price on the chart, our price is at. These are the key things we are highlighting. The price is it's already at the resistance zone. It is on the upper band. First of all, it is on the upper band. Two, it is also around our resistance. If we are to follow this trend line, this resistance line, it's already at our resistance line. It is already also on our upper band, which is also a key price reaction zone. If we are to base on it, it will, just like from what we said, that once it touches there, there's a possibility of a retracement, right? Yeah, or even a reversal. And so we are seeing that we are at a crossroad here. We are going to decide. So for me, what I would do, I will go to a more higher time frame and see what about later on. What is the general picture of what is happening next? In the larger time frame, we are still on the critical area, especially when it comes to the Bollinger Band and the trend line. Here, we are in the middle. The price is around the middle band. Which middle band? We also said is a resistance, acts as a resistance line, okay? A price reaction line. Also, if you check horizontally, we captured this in the lower time frame of 1 hour, that is another reaction zone, which is a resistance zone. We are not gonna just look at that. We know this is where our upper band is. So two things are gonna happen. The reaction will be in an attempt to either break above, which if it does so, we look out to this zone here, the upper band, being the next resistance zone, right? But also the next reaction may be that it's going to be rejected. And if it is rejected, we must see a pullback or a retracement back to this zone, okay? To this zone. Then later on to the lower band, if at all, okay? So, but generally, tracking from real time on how the market is behaving in the 4 hours time frame, we are not bad. We are really not bad. If we hold on to this trade, we make a decision to make entry, and we hold on to this trade, we are most likely going to see it deliver to the other side, okay? It may deliver past the middle band because it is telling us that, there's a beauty in that. There's a crossover has happened, and it's building up towards the overbought region. So we are still okay. It's still very early. So what you can only do is, if you're going to decide to trade this, you'll decide on either making entry at current price and then establish margin calls, okay, by measuring the margin call drop here and establishing the different in different calls. Or you can decide to use a preset. Set your preset around this area, which in this case, if you go to the 1 hour time frame, which we are analyzing the market from, is this area here. It is this area. Preset around here, the area around the middle band or the support, basing on the horizontal line. Set it there. Then if you set that, measure this distance from this to this area. See this? Do you see that? That was a reaction zone. I don't know whether we're seeing it. There's a reaction zone there. The price should dip before it can go and break. So set your preset around this area. Then measure that distance all the way to the lower band or this support, because horizontally, this is also an area of confluence. Okay? On the trend line, it is a support. Also on the Bollinger Band, it is the lower band, which is also a support zone. So you establish up to that point. However, the best you can do if you're going to base on a preset, normally I always say you calculate a percentage above. You see this area? When you're talking about a support zone, you're not necessarily talking about a line. It is an area. Just like we talk about the magnetic fields. For you to say that something has attracted, a magnetic substance has been attracted by a magnet, you just don't have to bring it directly into contact with the magnet. You just have to bring it around the magnetic field. For as long as it enters the spheres of the magnetic field, the magnet is going to attract it, right? So that's the same thing when you talk about support and resistance. It's not necessarily that it is a specific line or a specific price. Sometimes it is a range of prices. It's an area, it's a zone, okay? Like in this case, if you were to base on that, we would look at this as a zone. This is a support zone because it has to begin right away from where? From there. You see this area? From the high of that red candle to the open of the red candle. So it becomes like a zone. You see that? It's a zone. So if you're going to establish your preset, make sure you just don't exactly put it on the line you've drawn. Just you can put it slightly up because there's a tendency, because of volatility, there's a tendency that sometimes the price does not really touch exactly on the point you've pointed out. Sometimes it can come and touch, sometimes it may even go slightly below it, but to be safer so that you are not left out, any pullback towards the zone should be good for the robot to buy. So you set your preset exactly some percentage above the exact zone you have demarcated, so that as the price is dropping, okay, because it may drop and then it moves up without actually touching there. You see that? It doesn't mean that that area was not respected. It means it was respected, but for you, you considered only a line, yet it is really an area or a zone. So you set your preset at a price slightly above the exact point you pointed out as your support line, okay? Just slightly, so that you don't miss out. So you would set it around here, for example. You can set a preset around here, just above this area, maybe here. This becomes a preset, okay? See, it can be around there. Note, you can set it above, you can set it inside, you can set it even on the lower line, but an area slightly above is good because you'll be taken out, all right? The bot will buy. See that? Then you take your profit to the upper band as well. See that? To the upper band, or this line here. So that's how you're supposed to set this. Then you establish the margin call by measuring this to first of all get the margin call drop from point of entry. If that was the preset, you measure to this zone. That becomes the first margin call drop. then the second margin call drop will be to this area. This was the support, and then the third one will be there. Because if you check here, this was also a price reaction area. This was a reaction zone. This is also equal a reaction zone. Okay, so you also don't ignore that. There's this movement, then there is a dip, and then see that the pullback really did not come back to this very point, but it came midway. So this movement is very important for you. So this may also happen like that, and then you see that happening. So you need to know this is a reaction zone. So establish your preset slightly above the reaction zone so that you're not left out on that movement. Better still, you can enter at current price. Okay, I love current price for as long as I know in the bigger picture that the market is good. I love entering at current price and then just utilize the margin calls. Okay, you can enter at current price. Okay, like in this case, it is here, expecting a breakout, and if it does so, then this will be the destination. Your destination will be here. So literally, it means that you would measure from point of entry, which is current price, to this first support zone and set it as the margin call drop for the first call. Then measure the next from that zone to this area, this one here, this point, this one. This will be margin call drop for the second call, like that. And then you hold on and wait. If a scenario comes where the price now drops below that area, that's when you begin looking out for the next support zone. But this would be good for you. This too would be okay, first of all, because you are being intentional. You're not just opening it for the sake of opening, you're doing it on purpose. You know what you're doing, and you know why you're doing it. And then because you want to incorporate in an aspect of proper wallet management and also risk management, you want to make sure you trade accordingly, objectively, not just, allowing the robot continue buying, and then before you know it, everything is in the market. You have nothing to back up. You don't have any backup fund. And then you float. Yeah? So you should always know that. The market is not your friend, but you can always try and befriend the market in terms of analysis, okay? Yeah, so that you are intentional on what you're doing. All right, so I hope that is okay. I hope that is good and clear for everyone. We'll do now this is crazy. Imagine code up of 200%. Was the person doing what he or she was doing? Or for them, they think it's just a matter of establishing. Imagine code. Then sometimes I always get surprised, even the way some people said, you set a margin call drop. Imagine 1 up to 100. Or you 0.5, 0.5, 0.5 to 100, or to the tune of 50. Really? Like, are you serious? Really serious? And then when it goes to the margin, the multiple buying ratio, somebody is creating a uniform figure. 1. My dear, some settings, some settings are just for anyway. If you're a beginner, no problem. Maybe someone will understand that this one probably does not know what he or she is doing. They're trying out. Because that is, first of all, poor risk management, poor wallet management. You do that on features and you see, you'll be humbled. You'll move from hero to to zero. So sometimes let's be intentional on what we do. Okay. Yeah, there's some settings that don't really make sense. Honestly, I believe some leaders tend to take you guys through the settings. I've not taken time to attend one of them of late, but I believe there's a trade setting session always. Come on, try to see what the leaders try to recommend. Okay, it's not just opening margin calls. Open margin calls on purpose. Let it be objective. What is the essence of opening 20 margin calls? And then in each of the margin call group, you're creating what you're setting it up. Uniform figure. 1, 1, 1, 1, 1, 1. Do you know market psychology really? Do you know what you're doing? 1, 1, 1, 1, 1, 1, 1, 1, 1, 1, 1. Ooh, that is wasting. That is poor wallet management. Before you know it, the market has only moved 5%. You already have almost your entire capital already in the market, and yet the market is still going. It is not done yet. But you're now just looking. Before you know it, it moves another 20%, and you are left in a huge floating loss. Why? Greed, poor wallet management, poor risk management. Risk wallet management and wallet management or capital management are two different things. So you need to understand them so that when you're opening up these margin calls, you do it intentionally, okay? You measure, you gauge. You go to the chart. Come on, go to the chart. Try to gauge your possible drop under normal circumstances. Then put it at the back of your mind that sometimes situation goes bad, all right? Some sentiments can drive the market crazy. It can lead to a serious dump. So you also need to bring in that aspect of consideration, or you need to consider that. How about have that aspect? How about what if? You always have that aspect of what if. You get that? That's where now it becomes very important for you to know how to distribute this capital very well. Possibly, don't go in all, okay? You don't go in. You be jealous. You be jealous. I gave you a scenario the other time, like that the money you're making, you're not the only person who wants to make this money. Even the very platform you're trading in also wants some money. They also want to make money from you. Yeah, from you. You get that? From you. They also want to make money from you, especially in the futures market. It's a win-win. Okay? They also want you to lose so that they also take the margins. Because it's not going to be only you winning. How is it going to make the money? It also wants that moment where it also makes the money. You get that? So when you get liquidated, hey, if you get liquidated, if you get liquidated, the exchange is happy. They made some money. They've added liquidity into their. Okay, so one of those days you need to pay attention to when you're trying to do your settings. Yeah, you do your settings. It is always very important to cumulatively you make those money. Okay. Yes, there are good days where the market is really good and you can make so much, but not every day. So not every day. There are days that the market is really dormant. Okay. So don't think about making entry with a huge amount. And two, not every time you should be trading. Trade when it is necessary. Trade when you really have to trade. You don't have to trade because everybody else is trading. You get that? You don't have to trade because a signal has been dropped. You have to trade. You must. No. You trade really when you have to trade. Trade when you know you will have a little bit of time to also monitor. Okay? Because as you are aware, there is a saying that as the cat is aware, the rat is always happy and enjoying. They take over the house. But when the moment the cat comes, what happens? So it is the same thing. When you set this trade, don't forget. Don't assume that I have it all. I've managed it. I am good. I'm sure. Sometimes take a moment off to go and check. Because nowadays even sentiment changes things. News, anything you hear, something has happened, the US is planning this, or that there is a rate cut, there is a rate increase, there is interest, everything just around is happening. And if you don't pay attention to some of them, before you know it, the next time you come and check, you're already in a deep floating loss. So let's pay more attention. Let's be traders who trade intentionally with intentions, okay? Yeah, let's briefly do that. So I think with those, we're good to go. We're good to end the day's training or today's training, so that we can prepare for the next session. I believe there's the next session going to come. So we'll have we'll see you there. We'll see you in the next training. Okay. And as for me, I would say it's a day for me. Okay, I call it a day for me, or on my end, and wish you the best in the course of the day. Happy trading. Happy having every leader on board. Leader Emmanuel, thanks for the great work. Lead Coach Mopiwa, amazing work. And then Doris Sanjo and all the other couple of leaders who are really ensuring that we keep learning, we keep moving, so that we are not backed down by whatever that is happening. Let's keep learning. Let's keep being there. It's a sacrifice. Let's make it happen. Let's make it work for us in our favor. All right. Thank you so much. I hand it back to the leaders on the call to say a word or two before we can close. Yeah. Any leader there?
Thank you, Coach Musa. Thank you, Coach Musa, for your time. We appreciate you. We appreciate you. I see that our Coach Mo is online, but maybe he's busy doing some other things. So you can just close the Zoom, Arida, if there are no questions.
All right. This leader here, Brian, I think your hand is up. Anything? Any question?
Yes, leader. I've got my premium trading view, which I pay. I think is it 110 Australian dollars every month, but I just need the help. It looks like the fib, the information is congested because I put in the extended fib, so it's not readable. So I was trying to adjust so that at least it will make sense. So I'm stuck on there.
You have the premium, eh?
Yes.
You
So
seem to
I've
be a
got
very
the
serious trader, eh? So
so I've got
the free one does not work for you, eh?
yes.
Wow.
So
Okay.
just a quick one. I just needed to see how I can uh, make it readable because there are too many numbers now.
What do you mean it's not readable? You remove other things, other parameters, other indicators. It's just a matter of removing them. I think it is you who added them, because even if you have the premium, it doesn't just add up. It's you who add them on the chart, right?
I'm the one who added them. So my question was just that if I move the extended one fib and just use the automatic or fib, or just use the manual fib, I'm not understanding which one is better for me to use.
Okay. Okay, for me, all works, but I don't know which one you prefer, because
I prefer
that's
auto fib,
then use the
automatic.
auto. You use the auto. You, if you had added the manual one, you delete the manual one and use the auto always. And the good thing is,
Okay.
once you add it on the chart, as long as you have not deleted it, it remains on the chart. There's no problem.
Thank you
So
for
here
that.
you can
Yeah.
go ahead and retain it there. Yeah. And then maybe you can go and customize it further, because I know it has a lot of the auto one. Normally in the default setting has a lot of fib ratios or fib levels. So you can go ahead and customize, remove some other fib levels, and then you remain with the key ones, possibly maybe from 1 to 100, and those in between. Yeah, or maybe one extra above and one extra below. That will work. Yeah.
Perfect. Thank you for that. Otherwise, we are all in the same direction to make money. Thank you, my leader.
You're welcome. Okay, I think we are good. I'm now out. I'm signing out. I gotta make money. I see the market is doing good. So yeah, see you guys next week.